How to invest in crypto for beginners. Cryptocurrencies have become one of the hottest investment trends of the 21st century. And as of 2025, they're no longer a niche interest reserved for tech enthusiasts. With over 20,000 different cryptocurrencies and a market worth trillions of dollars, the opportunities are vast, but so are the pitfalls. Here's your ultimate beginner-friendly video to start investing in crypto safely and smartly. 1. Understanding cryptocurrency. Cryptocurrencies might seem like a futuristic, almost sci-fi concept, but they're very real and rapidly changing the way we think about money. Imagine a currency that's not controlled by banks, governments, or any central authority. It's just you, the blockchain, and your digital wallet. This technology ensures security through cryptographic techniques and uses blockchain to maintain a transparent and immutable ledger of all transactions. Bitcoin, the first cryptocurrency, was introduced in 2009 by an anonymous figure known as Satoshi Nakamoto. Since then, thousands of cryptocurrencies have emerged, each with unique features. Ethereum, for example, supports smart contracts, which allow programmable agreements to execute automatically when conditions are met. Blockchain is now used in industries beyond finance, such as healthcare, supply chain management, and gaming, showcasing its versatility. Understanding this world is your first step into an ecosystem that combines technology, finance, and innovation into a seamless experience. 2. The allure of crypto. Cryptocurrencies have become a buzzword in investment circles for good reason. For one, they've created millionaires almost overnight. Imagine waking up and finding out your $1,000 investment in Bitcoin is now worth $10,000. This potential for high returns keeps investors hooked, even with its risks. Beyond the money, crypto offers the possibility of democratizing finance. You don't need a Wall Street portfolio manager. You just need an internet connection and some determination. Additionally, the idea of decentralization, where no single entity can manipulate or control your assets, is revolutionary. Applications have further spurred interest, allowing people to lend, borrow, and trade without intermediaries. For many, it's not just about the money, but being part of an emerging technological revolution. The question isn't just, why invest? But rather, why not? 3. The risks. While crypto promises high rewards, it's not without risks. Take the example of the FTX collapse in 2022, where mismanagement led to billions in investor losses. This serves as a cautionary tale for anyone diving into the crypto pool. The volatility can be stomach-churning. Bitcoin might soar 20% in a day, only to drop 30% the next. Regulatory uncertainty adds another layer of complexity. Different countries have varying stances. El Salvador embraced Bitcoin as legal tender, while China cracked down on crypto activities altogether. Even the technical side poses risks. Hackers are constantly looking for vulnerabilities, and if your private keys are compromised, your funds could disappear in an instant. It's like a double-edged sword. Exciting, but you'll need to tread carefully and always stay informed. 4. Getting started. 1. Educate yourself. Cryptocurrency isn't just a trend, it's an entire ecosystem, and diving in blindly can be a recipe for disaster. Start with trusted resources like CoinMarketCap Academy or Investopedia's crypto video. Learning about blockchain technology, market cycles, and risk management is crucial. Social media platforms like Twitter and Reddit are buzzing with crypto communities, but always double-check information from these sources. Podcasts like Unchained by Laura Shin also provide invaluable insights from industry leaders. The learning curve might seem steep, but think of it as an adventure where every step gets you closer to understanding this dynamic space. 2. Choose a reliable exchange. The exchange you choose can make or break your crypto journey. Coinbase is beginner-friendly with a simple interface, but its transaction fees can add up. Binance offers advanced trading features and lower fees, but navigating it might be overwhelming for newcomers. Kraken is excellent for security-conscious users, while Gemini focuses on compliance and user trust. Don't overlook platforms like eToro, which let you copy trades from successful investors. As of 2025, security remains a top priority, so look for exchanges offering two-factor authentication and cold storage for user funds. Researching your options is key to a smooth start. 3. Create and verify your account. Opening a crypto account is like setting up a bank account, but cooler. The verification process, known as Know Your Customer, ensures compliance with anti-money laundering laws. Be ready to provide a government-issued ID, proof of address, and sometimes even a selfie. Though it might feel invasive, this step protects you and the platform from fraud. Most exchanges make the process seamless, and in 2025, the average time to get verified on major platforms is under 24 hours. Once verified, securing your account with is non-negotiable. It's like having a lock and an alarm system for your digital assets. 4. Deposit funds. You've got your account ready, now it's time to fund it. Most exchanges allow deposits via bank transfer, credit card, or third-party apps like PayPal. Each method comes with its own fees, so check the fine print. Credit cards might be convenient, but high transaction costs can eat into your investment. By 2025, integration with payment apps has streamlined the process, making deposits faster than ever. Always start with an amount you can afford to lose, especially as you're learning the ropes. Remember, crypto investing is a marathon, not a sprint. 5. Choose your cryptocurrency. Starting with established coins like Bitcoin and Ethereum is a smart move. Bitcoin is often called digital gold due to its store of value characteristics, while Ethereum's utility in decentralized applications makes it the digital oil of blockchain. In 2025, emerging coins like Polkadot and Solana are gaining traction due to their scalability solutions. Research is critical, read white papers, study market trends, and understand what makes a coin unique. Diversification is essential, but avoid falling for the hype of meme coins, unless you're okay with the gamble. 6. Make your purchase. Making your first crypto purchase feels monumental, like buying your first car or house, but without the paperwork. Most exchanges have simplified the process, allowing you to buy in seconds. You don't need to purchase a whole Bitcoin. Fractional investing means even $50 can get you started. Take your time to review your order before confirming. There's no undo button in crypto. 7. Secure your investment. Security is the cornerstone of crypto investing. Hot wallets are convenient but vulnerable to online threats. Cold wallets like Ledger or Trezor devices offer offline storage, making them virtually hack-proof. In 2025, biometric wallets are gaining popularity, adding an extra layer of protection. Treat your private keys like the PIN to your bank account. Never share them with anyone. 5. Strategies for investing. Hodling is great if you believe in crypto's long-term potential, but it's not the only strategy. Dollar-cost averaging smooths out market volatility, making it a favorite among cautious investors. Swing trading is another option, where you capitalize on short-term price movements. Diversification remains a golden rule. Spreading your investment across various coins minimizes risk. Finally, staking is gaining traction in 2025, allowing investors to earn rewards by participating in network security. The crypto world offers endless possibilities. The key is finding what works for you. 6. Staying informed. The crypto market is like New York City buzzing with activity. Platforms like CoinDesk, Decrypt, and The Block are reliable for news. YouTube channels, Twitter influencers, and Telegram groups are also buzzing with real-time updates. Just be wary of pump and dump schemes and crypto gurus with dubious advice. Staying informed doesn't mean obsessing over every price swing, It means understanding the bigger picture and adjusting your strategy accordingly. 7. Tax implications. Taxes are unavoidable, even in the digital realm. In the US, crypto is taxed as property, meaning every trade or sale is a taxable event. Tools like CoinTracker and Coinly can simplify the process by tracking your transactions and generating tax reports. By 2025, countries like the US and UK have streamlined crypto tax laws, making compliance easier. Staying on top of your tax obligations not only keeps you out of trouble, but also helps you better plan your investments. And there you have it, your ultimate beginner's guide to diving into the thrilling world of crypto. If you're ready to start your journey or just enjoyed learning something new today, make sure to smash that like button, hit subscribe, and ring the notification bell so you don't miss out on more exciting content.